the disclaimer, which I believe you can see on your screen. David has said yes. Fantastic. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, we are going to be looking at the markets through the prism of volume price analysis. Those of you who come along regularly will know this is a methodology that David, my husband, and I have been using for almost 20 years, and the principles, the basics of the methodology are all outlined on the books on Amazon. This is the main book, The Complete Guide. I think it's got now 500-600 5-star reviews, which is absolutely fantastic. I get lots of emails from traders and investors all over the world telling me how much the methodology has really changed it's made a huge change to the profitability of their trading and investing, but it's really opened their eyes to what they should be looking at when analyzing a chart, because obviously we look at price action, we look at the volume, and really what we're doing with the volume, what we want to see is confirmation that the price action is supported, is valid, and the only way you can validate that is through volume, because volume is participation, it's activity. Is it a genuine move or not? And after yesterday, my goodness, I will talk about that in a second. And especially when markets are rampaging higher to the extent they were yesterday, I believe, and David believes, that it's the only methodology that you can use with a degree of confidence that will allow you to rejoin or join a move that is already underway, as it were. Now, volume price analysis, price action and volume, there are examples of of the concepts with charts in a book that accompanies the main complete guide, and we've bundled them up together as a box set on Kindle. And there, as I said, there is over 200 worked examples there. This one is primarily on stocks, indices. There's some commodities there, but there is a version for Forex. There's the Forex book. There's a VPA book for Forex, and there's also an examples book for Forex as well. Now, I want to bring this up again because, as I said, VPA is a foundation methodology, and on that you build in other indicators, standard indicators, we have proprietary indicators, and it's all overarched with time. And by time, not just the chart that you're trading, but looking at what is happening in multiple time frames. Even more important when you're trying to determine whether a move, a counter trend move that you're seeing, let's call it, sometimes people call it correction, a pullback, a secondary trend. Is that simply that, a pullback, a correction, or is it the start of perhaps a full-blown reversal? And as I said, one of the things that will tell you, or the only thing that will tell you, is actually volume. But VPA also includes candles and candle patterns, and support and resistance, because support and resistance is what you also use. You bring it into your analysis of what you can see on the price action and the volume. The support and resistance is key because it tells you if price has got to a certain point and is pulling back. Is it because it's reached a significant support or resistance point, either based on price or on volume? And therefore, if it's going to proceed further, it is going to need, a pretty hefty dose of volume to actually push it through those support and resistance levels. And some levels are going to be stronger than others, and there's all sorts of reasons why they are, they may be stronger at that particular time. As I said, and on top of that, you can then add on what you like to use to help you with your analysis, because indicators they're there to highlight potential trades, but they're also there to give you some kind of confirmation. The key to indicators, whether proprietary or standard ones, we call them secondary tools. It's not because they're second best, it's just that your primary tools are what make up the VPA methodology. You have to use them in the way they were designed. Moving averages, Bollinger Bands, they work in certain market conditions. Now, what VPA will do for you is it will reveal the structure of the chart in terms of whether it's, is it in a trend, is it in a congestion phase, is it a trend with volatility, is it a trend, non-volatile trend, are we in a congestion phase with volatility or without? So once you have this, once you can recognize the structure of the chart in front of you, then you can say, well, actually, a moving average works really well when the price is trending higher. Whatever we've got, a Fibonacci, etc., etc. They've all been designed for, you know, to bring some clarity to the chart, but only under certain conditions. Right, I'm going to stop there because the best way to see it is actually in action. Right, before we do, very, very quickly, what's happening today? Well, after yesterday, it's been a bit sort of up and down. The US 30, that's the YM, that has been moving higher. The Nasdaq, not so much. In fact, I've been waiting for the YM to break out from a congestion after the open, and it looks like it has taken off. It's now up 245. Let's have a look what's happening with the Nasdaq, and the Nasdaq is actually down 160. So there's a lot of divergence between the different indices, and the futures, the S&P, they're really not doing anything at the moment. And there is a reason for this, and it really does all go back to yesterday. And I think I have lost my article that I was going to show you. Right, I will find it and I will put it up later. Essentially what happened yesterday, other than the rampaging price action that we saw on the chart, obviously the overnight from Sunday at the weekend, the view is that Biden will now be the next president of the US, but we still have to wait for, you know, final confirmation for that. But the market has taken it upon itself that, yep, that's what's going to happen, and off it went. Globex, I think when we came downstairs yesterday morning, about 400, 500. So they were all, you know, moving up nicely. Then we had the news of a potential vaccine that will all help everyone to get out of the situation that we are in at the moment. And the market took that as the most wonderful news. It is wonderful news, but there is a big but about this. This was on a press release. This hasn't been validated, hasn't been reviewed by what's called peer. Is it a peer review, David, in scientific circles? There are all sorts of things around this vaccine. That one is, for example, it has to be kept at a very special temperature. You know, there's lots of things surrounding it, but the news itself was sufficient. And we know yesterday it went up 1,700 points, I think, the Dow. And in fact, just to put it into context, it's the biggest post-election jump of modern times since 1900. That is the scale of the movement. I think it's like something like a 4% move. To put that into context, most fund managers, if they can return 4% a year, they think they have done really, really well. So 4% in a day. There were all sorts of other problems. I don't know if any of you had problems with actually being able to place a trade. Brokers, you know, the whole thing was completely overwhelmed. So in this amazing move higher, I suspect many traders weren't actually able to get in and profit. And what happens if you see this kind of move in front of you, and assuming you can, you know, you can join in? Where do you get in? Do you simply blindly go in? At what point? You know, what can you do? This is where, as I said, using the concepts that make up VPA will help you. And what we'll look for is we will look for some of those examples for you, and in multiple time frames. That's absolutely key to this. Multiple time frames is also the key to finding a successful entry or re-entry, or maybe adding to a position, and then the support and resistance element as well. Right, finally, just generally on some general background, you may want to check out, this is George Friedman, who is a very eminent, he writes on geopolitical matters. He's got books on Amazon, and they're fascinating just from a just a general perspective anyway. But he has a combination of a paid service, but he's got a lot of free stuff on this site. It's called geopoliticalfutures.com. This is his latest article on the 10th of November, and it's really worth a read. And you say, well, why? What has that got to do with my trading and what have you? Because I'll tell you why. The reason is it has a direct impact of if it is going to be Biden, and it's, are we going to have a blue wave? The Senate isn't tied up one way or another. I believe there's a runoff for 2 seats in January. So there's a lot of uncertainty out there. How is the market going to react? And although this has got things like foreign policy involved in his articles as well, it's just interesting to have this in background and for your general information, because the markets will also be trading against this background. There is the manipulation clearly as well, but this is the background as well. And he writes in a very easy to understand way, and as I said, I can't recommend him highly enough. So that's what I was going to say on that. Moving to the markets themselves, what have we here? Let's have a look. I've got some right, this is the let's move it up to the 5-minute chart for a second. There we are, NinjaTrader. Right, what have we got? Here we are, we're 12. Here we are. This is the usual volatility that we have had, that we always have at the open. As I said, I've been waiting for the break. This is the volume point of control. It tells us that place on that zone, that place on the chart where the market is perhaps in price agreement. There's no firm direction in one way or another. There's no clear bias. I mean, we had what did it do at the open? It shot straight up, straight back down to the VPOC, straight down again. Lots of candles with lots of wicks to the bottom. We can see the extent of the volatility. The buying then comes in, pushes it straight back to the volume point of control, and up we go again. Now, what's happened is, in pushing it higher with not a huge amount of volume, so that is an anomaly in itself. It has triggered what we call the volatility indicator, because this piece of price action is outside of the average true range. It has now retreated to within the spread of this candle, which is what we expect. And so, choppiness, whipsawing, it really needs to, we need to get some firm, clear direction, certainly on, if this is the time frame that you would be looking to trade. What is also going to be interesting today is how many kind of doji candles we're going to see. The markets may have reacted in a spectacular way yesterday, but today it's, well, it's a bit like the day after, a fantastic party. Everyone wakes up with a bit of a sore head, and you think, oh no, what? Yes, and what actually happened yesterday? Did I really, oh my God? And you start to reflect a little bit. Market's got a little bit of a feel to it at the moment. Now, my own time frames for this are certainly on the YM. I usually have the 3 minute. I have got a Renko chart up, which is doesn't have time in it, so it will just give me, if you like, a cleaner view of the price action. There we are. This is what we see here. Takes away all the as I said, the choppiness, the whipsawing, and it also gives me a sense of the momentum. And this is what I mean. We have periods of congestion, then it goes back up. We have these pullbacks. Now we're going back into a period of congestion. It's it's reflecting what we see on the time chart. Support and resistance levels, you've got to look at support and resistance. However you define your support and resistance, this is the accumulation and distribution indicator that comes with Ninja. Then I also have the Camarilla levels on here as well. They work on the Renko chart for Ninja. They do, you can apply them to the chart, and these are the levels that, you know, the market will be looking to either aim for, congest around, reverse from. You know, there's a whole protocol around the Camarilla, and you know, all that is written up in the quantum trading site, and also the quantum trading YouTube site. I think David has done, I don't think lastly he's done another 20 odd videos for the TradeStation version of these indicators, so you can check them out there and look at for this reversal. Now, to get back to the time chart, again, we're talking about support and resistance. What happens when you have a volatility candle, as we see here, the high and the low of that candle also becomes important support and resistance level. So while it is trading within the spread of that candle, a conservative approach would be, well, it really has to break either the top or the bottom. If it stays in the center like this, we can expect yet more choppiness, whipsaw price action. But for a firm direction, it needs to break, as I said, the support and resistance, and also be supported with volume. And what we don't want to see is, while the price is moving, is really all this falling away, because that tells us there's no participation, there's no activity. It's, you know, it's really not going to go very far. And if you are going to attempt to take a trade, maybe you're a trader who likes to trade the seconds chart. David has the seconds chart. He's comfortable with those time frames. That's fine. But for me at the moment, I now have to be patient. It looked as though I had this, which was great. Also, with the trigger of the volatility indicator, you can also use it as an exit. So it has a lot of it's a multifunctioning indicator, as it were. I was looking at the Forex as well. In fact, I had been on the pound yen, but in fact, a very nice trade came up on the pound New Zealand. There was the pound being bought. This is our currency strength indicator. And in fact, of the pound pairs, what it also tells me is that if the New Zealand is being sold, and I haven't got the Aussie on here, but if the Aussie is being sold, it also gives me an insight into the sentiment that is now swirling through the market. The market is clearly, you know, it's maybe not having second thoughts about yesterday, but it's perhaps being a little bit more circumspect in the conclusions that it came to yesterday. To get back to the divergence between the YM and tech, why are technology stocks selling off, whilst the Dow, which are more kind of more value stocks, why are they going higher? Because yesterday, in all the euphoria, it was I know the Nasdaq went up as well, but not quite so much. It was really a case yesterday of dump all the safe havens. The yen was sold, treasuries were sold, gold was sold. That went sold off really heavily because it was, you know, as I said, the euphoria of, oh my goodness, you know, the economy can get back on track, you know, things can get back to normal, you know, let's go out and buy a risk asset. So it was one of those days. And of the and I've just read actually on my newsfeed, Carnival, obviously the cruise company that has taken an absolute bath since the virus. They've actually gone to the market to try and raise some more money. I mean, if you knew how much it cost to keep a cruise liner docked, anchored offshore and not working, I mean, it really does make your eyes water. I will try and find that that article. It's from Bloomberg. It's actually on my Anna Cooling Facebook page. It's really, really interesting, and it really explains what happened yesterday. Right, let's go back to the charts, because what we actually want to see, and I think probably best see it on the charts that David has is really looking at how you can rejoin a move that is already in trend through principles of VPA, looking at primary trends and what we mean by secondary trends, pullbacks and corrections, and using SNR to help you as well. But before I go, I know we don't normally talk about Forex in this session, but we do have a little announcement, and I will go and find it. And that is, ta-da, here we are. Right. This is our quantum trading education site, which is for, as I said, for Forex. And this is a Forex education program where obviously volume price analysis is a huge deep dive into it. Work of Richard Wyckoff, as I said, a lot of information on primary and secondary trends. What we have developed, what we now have available for students of the Forex program. And by the way, this also applies to whether if you want to trade futures, because when I say Forex, it's not just the spot Forex markets, the futures markets is now, but for spot, you will now have access or the opportunity, students of the program, to trade a funded account. It's not your money, there's no risk to you. And the accounts start at $5,000, and you can work your way up to an account of up to $2 million. But the key thing is that there is absolutely no risk. We are taking all the risk. It's a way of, well, what are the advantages? It gets you used to trading big accounts, which maybe you may not want to. You may not. The other thing about it is you may not want to start and putting a large sum of money, of your own money, into an account, because you think, well, I may not be able to. Let me see how I'm going to get on with this. Well, one way around that is to use somebody else's money, and this is what this program will do. And it teaches you the discipline of trading. There are very strict risk and money management rules, and it gives you a pathway into, if you like, the proprietary trading environment, because with the track record of being able to handle this kind of, these kinds of accounts, I can assure you there will be companies out there who will be wanting to bite your hand off. That's it. Well, if you've got any questions on it, we're happy to answer in the chat box. I know David has, he's got some things to say about it as well, and you can trade it also in parallel to your own personal account. As I said, we think it's got some huge advantages for people who want to become traders. I have to also say, this is for spot Forex, but the principles that we teach in volume price analysis are applicable to all markets. It's not, this is very specific to Forex, but the elements of the modules in the program, the fundamental module, relational module, psychology module, the mechanics of trading, they all carry over into other markets and instruments. Right, I'm going to keep an eye on my YM, and it looks like it's actually breaking lower. Let me go and see what my things looks like. Yep, the break would have been from here. I'm going into free space here. Where's the R1 miles, the S1 way down there? So possibly the opportunity for a short on the YM. We'll see what happens there. I'll just pass over to David.